Hey, what's going on, everybody? It's Spencer from Gray Capital. If you're interested in investing in real estate syndications, maybe you've already been investing in real estate syndications, but especially if you're thinking about it, a lot of people, they're wondering, all right, I've sent over my money, I've made that wire over to the company bank account. What happens next? What are the next steps? What happens as soon as we close on that property? What happens on site? And then eventually that leads to you getting an actual distribution and getting a return and putting some of that money back into your own wallet. Well, we have an incredibly specific plan that we use at most of our properties. Each one's tailored for each individual acquisition, but we wanted to kind of take you through what that process is for as soon as we acquire a property, what happens on that day of acquisition, the next week, 30 days, 60 days, and 90 days to produce the most successful investment possible. First, I want to say, appreciate you taking the time to watch this video. If you find these videos interesting, you're interested in multifamily investing, real estate investing, make sure you're subscribed to the Gray Capital YouTube channel. You give this video a like and leave a comment below if you have any questions whatsoever. On the day of closing, it's not like closing on a single family home where you may have the buyer and the seller all meeting at a title agency's office or an attorney's office, kind of waiting everything to kind of come through, you're signing documents. It's a little bit different in terms of a commercial real estate transaction. Most of the documents are signed days prior because there are significant amount of documents like a single family home sale or purchase, but even more for multifamily. You can imagine all the partnership documents. Typically for myself as kind of the lead sponsor, a principal, and a manager for these investments, I'm typically signing anywhere between kind of 50 and 70 individual documents, or at least signature pages to kind of get the deal done entirely. So everything is signed a couple days prior, attorneys have reviewed all the documents, everything is all buttoned up and ready to go. I mean, there's been a ton of work prior to this point that we're not gonna get into today, from due diligence to negotiations to inspections to doing title work and survey work and insurance and legal and getting the loan in place. That's all been done at this point. The paperwork's been signed. Typically the last step is some kind of final sign off from the lender that's gonna be providing the debt for the acquisition. Once the lender's given that sign off, funds are wired from the lender as well as from the purchaser, typically us or whatever syndication or sponsor is buying the property. Money goes to the title company, wait around, finally have those wires hit. Then they are released after everyone's given approval that everything is the way that it's supposed to be, everything looks correct, all the numbers are the right. That money is then distributed. The seller receives their funds, the lenders being paid off receive their funds right around the same time, and sometimes it can take place earlier that same day. Our new on-site team is ready to take over that property. Oftentimes, you're able to retain much of the on-site staff that's working at that property. So hopefully your property manager is a good property manager and they've accepted employment with the property management company to continue to work on that property. Not always can you retain the staff on site, and if you can't, would have already been going through the hiring process looking for replacements. If you don't have that replacement staff to start right away, you're going to have personnel either from other properties, swing personnel, or a regional manager to come in and fill those roles until you have permanent staff in place on site that can manage the property going forward. But whatever the makeup of the staff is, one of the first things that is done is some sort of staff orientation and onboarding for the new property management company. It's getting them logged into the system and starting to explain how the new property management company operates, what the business plan is, and how things are going to be different compared to the last owner. We also want to start onboarding and introducing ourselves to new residents. This typically is done by sending out an email or some kind of electronic communication to residents that the property has been sold, who the new owners are, and the steps that they need to take to sign up for the new payment portal and new systems that they'll be using to pay their rent and to track any updates from the property itself. There's also a physical letter that is typically taped on every single door or slid under the door, every single resident at the property, notifying them that the property has been sold, who the new owners are, who the new property manager is, and all the contacts, and again, the steps to take to get them signed up for the resident portal. The next step, which really should have taken place prior to closing on the property, or at least should have been started, is to start transferring all of the systems, specifically the property management software, over to whatever system that you're now going to be using from the prior owner's system. This is a relatively straightforward process, but it can get very complicated because some systems communicate to others a little bit easier. If the past owner is using the same property management software, that makes it very easy. But getting all of that loaded in is incredibly important. And also, again, setting up that resident portal so they can go on and actually start paying you rent as soon as possible, communicating with residents throughout the process to make sure that when they are aware of the sale and that they are aware that they need to change their payment information and they need to go into the new portal to get set up so they can continue to pay rent. The last piece on operations is really updating all of your vendors, giving them an update that there's new ownership, updating any contracts that need to be updated, giving any notifications that need to be given, and then also doing a new market survey. You should have already been doing market surveys prior to close, but now that you're actually on site, it's a good time to kind of go through your market comparative analysis to see what competitive properties are currently charging, what their occupancy rates are, what type of offers, or if they're giving away any concessions, to make sure that your rents are set at the appropriate level and you're taking the right steps from a leasing and marketing standpoint to maximize the performance of the property. So that was operations. Now let's talk about marketing. Marketing is relatively straightforward. Again, it ties into doing that market survey of competitive properties. But you want to make sure that if you were going to be using an internet listing service like apartments.com, you don't want to lose any time. You want to be able to get on that service as soon as possible with the updated pictures, photos, videos, the correct rent information, the correct floor plans, and making that listing look as professional as possible. The other piece is making sure that the property website is up and running. It's been updated with, again, the best pictures that you have, the most updated rents, the resident portal is all set up. And so when a prospective resident searches for you or an apartment in the area, they have all of the means and the tools to actually be able to sign that lease. The third big component is construction. Now, you've been building a budget kind of throughout the process, even before that you place the property under contract. While you're under contract and due diligence, you're refining the scope of your renovation plan, any kind of capital expenditures you're going to be doing. You're doing your best to get any bids and quotes, but usually you can't get complete bids until you actually close on the property because you don't have complete access for the property. You may be limited to what you can actually do on site outside of your due diligence period. You can get a good amount of work done prior. You typically can't get all of those final bids, especially going back to your second and third vendor to get those second and third bids. Typically that can't be done until after you close. So that's one part of the process that started immediately after you close on the property. The first project that we're always looking at doing is what are lender required repairs and health and safety issues that we need to address immediately. Whether it's issues in the sidewalk, whether it is balconies that are leaning over, any kind of trip hazards, anything that could be a liability at the property. Typically your insurance company or lender are going to be requiring a lot of these fixes, but we've done a large assessment, a detailed assessment during our due diligence period. Everything needs to be taken care of the property within the first 30 days. So we are getting started on scheduling those repairs to take place within that first month of ownership, but also getting those bids for those larger projects that may not take place until later on in the year or later on in the hold period. But you're doing that to be able to finalize your budget so you have a good and holistic picture of what that investment is going to look like and what the construction process will look like over the next year or two. So that's what's going on for the first 30 days at the property in terms of property takeover, staffing, residents, construction, marketing. But as an investor, what's kind of going on in your world? You're going to be looking at that investment portal that you are invested in with your sponsor, whether it's Gray Capital or another group. That investment should be posted pretty soon after that investment is closed. You should be able to see your investment in the investment portal, and you're going to be looking out for updates. Typically, these updates come monthly, at least quarterly, and distributions should be starting monthly, if not quarterly as well. Many groups distribute on a quarterly basis. But many groups such as Gray Capital and the Gray Fund, we distribute on a monthly basis. At the end of the month, you should receive your first distribution and actually start seeing those returns in the cash flow, which are the whole reason why you made this investment in the first place. When you get these reports and you get your distribution, it's important to actually read the report itself, look at your distribution, make sure the distribution lines up with what the report says that you should have received, and go through the report because it typically outlines current activity at the property, certain key performance indicators such as occupancy, delinquency, rent growth, net operating income growth, really any important metrics that are germane for that period of reporting. It should also give you an overview of any kind of renovations, CapEx, any problems that are going on the property, as well as any kind of capital activity. So down the road, this would be after closing, but if there's a planned refinance or a sale, that should all be included in that report. It's important to go through it to make sure you're asking your sponsor any questions that you may have, or just to understand the process a little bit better. So we've gotten through 30 days, we've onboarded the team, residents are brought up to speed, we've started our construction projects, we're getting those health and safety issues taken care of, we've got vendors on site, we have contractors scheduled for your capital expenditures. Now we're going to be really getting into kind of the meat and potatoes of operations. So this is ongoing training for on-site staff, making sure the maintenance teams are fully trained up and know the policies and procedures of the property management company. It's also for the kind of the office staff, the property manager, system manager, and the leasing consultants, making sure that they are all up to speed on the latest fair housing requirements, all the latest training, and really, most importantly, getting them onboarded to the culture of the company and the right attitude for the business plan going forward. Gray Capital, we think this first 30 days incredibly important to build a relationship with the on-site team. We're on site, typically day one and throughout the first week and the first couple of weeks periodically, showing that we are present, we're here to provide them assistance. Just as a recent example, we closed on a property in Indianapolis. We went over on site, went through the maintenance garage essentially, or the maintenance shop, and we found a lot of issues. They were missing a lot of tools. The maintenance staff, they were bringing their own tools in from home. The golf cart that was on site, the battery was dead, it wasn't working. So within the first day, new tools, working golf cart, and it is incredible the attitude shift when the on-site staff, which are the most important players in a successful investment, they feel appreciated that they have the resources and the tools to get their job done. Because unfortunate as it may be, many property managers, especially if it's an out-of-state owner, third-party property management company, they might not care. They're trying to run the property as cheaply as possible. So cheap that can be detrimental to the actual performance because things aren't getting done, and your staff, the people again that drive this investment, they're not motivated to do their absolute very best because they don't feel like the ownership cares, and so why should they care? So it's very important for us to set the tone that there's a new ownership, we care about the property, we care about the residents, we care about you, the staff, and we're here to help you, give you all the resources that you need to be as successful as possible. Because I've seen it time after time, on-site teams don't get read in or brought in and buy in to the business plan of, hey, we're gonna fix this place up, we're gonna make it better, we're gonna have a better living experience for residents. This property is gonna look incredible when we get done with it. It's gonna be the best property in the submarket. If they're not on board with that vision, it's just not gonna work, especially if you've had staff that may have been at the property for years. When a new owner comes in and they say, hey, we're gonna increase the rents by $100, $200, well, that property manager, he has a relationship with a lot of these residents. They may live on site, these are their neighbors. And so they can be pretty adverse to large rent increases at first. But it's all how that story is told and the business plan is explained. Because if it's just, we're gonna raise rents to raise rents, yeah, that might make sense to an investor, but again, to the property manager, they get it too, but you have to show the value. And if we talk about the value that we're going to be creating for residents in the better living experience, the $100 rent increase or the $200 rent increase all of a sudden is not a big deal because the residents are going to be getting so much more in return in exchange for that increase in monthly rent, which is how it should work. So once you're a little bit past the 60-day mark, this is when, if you're doing interior unit renovations, those should start to really be ramping up based on how many units you have to renovate based on the amount of turnover that you have at the property itself. But by 60 days, you should have all of your vendors lined up. You should have your scope finalized, ready to go as soon as a unit becomes available to renovate. You also should have completed a lot of those health and safety issues, if not all of them, really within the first 30 days. There may be a few that kind of hang out over that are a little bit of longer projects. You also should have started, if not getting ready to begin, some of the exterior CapEx, whether this is replacing any roofs, gutters, siding, doing any asphalt work. That should all be beginning to start around that 60-day mark. In terms of marketing, you're also now going to be going back and doing another market survey. I think it's good to do a market survey every week or every 2 weeks, but at least doing it monthly to make sure there hasn't been a major shift in the market by some of your competitors, either to the upside or the downside, and making sure that the on-site teams are well aware of what's going on in the market. It can be the biggest difference between a lease that is signed or not, because that information is critical in the sales process to a prospective resident to have knowledge of the surrounding market itself. And so really also by 60 up to 90 days, if you have not been receiving distributions, maybe you're on a quarterly distribution instead of monthly, but you should be expecting your first distribution, assuming that this property is cash flowing out of the gate and things are going well. Now, some investments, they plan no distributions for the first year, maybe couple of years. Especially if it's a ground up development, it may go 3 years before any distributions. There may not be a distribution until a sale. But typically for the properties that we look for, we acquire based on our criteria, we want to have cash flow being produced at acquisition. And so as we look to distribute just 1 month after we close on a property for our fund, we're distributing either a 10% preferred return or a 7% preferred return based on what class you invest in right out of the gate. Therefore, we need that cash flow to be there, but by 90 days, even if you're on a quarterly investment schedule, you should receive your first distribution. If not a distribution, you should be at least receiving that quarterly report. And again, you want to go through that quarterly report, read it, and ask questions so you fully understand it. So after the 90 days, we should be relatively smooth sailing with the business plan being fully executed, unit renovations continuing, any other capital expenditures, construction projects being done as they are scheduled and they are budgeted for, distributions being consistent, reporting being consistent as well. And again, if I can't stress this enough, I mentioned this a couple times in the video, is making sure that as an investor, to be the best investor that you can be, to make sure that you read those reports and are asking questions about those reports. And if you're investing with a new syndicator, I think it's a good question to ask what is the plan after closing? What is the plan for the first week, 30 days, 60 days, and 90 days? You don't want to have happen is to close on a large multi-million-dollar multifamily property and then to start figuring it out, then to start making your first call to a vendor, then to start thinking about how you're going to transition the on-site staff, what you're going to do. This all requires you having this plan prior to close so you can hit the ground running, not lose any time. I've seen it too many times. If you wait 1, 2, 3 months, all of a sudden you may be out of a season to get certain projects done. You may miss that peak leasing season. You may not be able to get scheduled to get that roof repair or the asphalt done because the asphalt companies or the roofers, they're scheduled for the summer. You have to move as quick as possible, still getting enough bids to make sure you're getting the right price, but taking action on the day of closing, creating that momentum, not only on the planning side, but again, getting the on-site teams and the residents all moving in the right direction and making it very clear that, hey, there's new ownership here, things are already better, and things are only going to continue to get better over the next several years. Now, at the end of the day, years later, when the property is completely seasoned, maybe there's been a refinance where you've received a significant amount of your capital back, at some point the property will sell and you'll receive a nice distribution, and a good total return on your invested capital. Hey, thank you for watching this video. If you liked what you saw, I'd love for you and really appreciate if you give us a like, leave us a comment if you have any questions, subscribe if you'd like to continue to receive these types of videos. If you want to get in touch with us, go on over to graycapitalllc.com. Now, if you're an accredited investor and you actually want to invest with us, just go over to gray.fund to learn more about that. Again, I hope you've enjoyed this video, and we'll see you on the next one.